I'll click on top down budget to show you, and this is one that I prepared earlier. This budget is for the year 0809B budget. As you can see, we can budget into the future, and we have budgets going right back to the past. In 0809 we've set a target net profit of $85,000. If we go to the net profit space, you can see that we actually are only going to achieve $82,568, and that leaves a deficiency in the budget of minus $2,432. This worksheet gives us information on which to make some decisions. We have the values from the previous financial year, 0708 in this case. Then it shows us the growth that 0708 achieved over the 0607 period. So in this case revenue only grew 1%. Cost of goods increased by 5%, and so on. It starts off by passing these values over to the forecast change column with the assumption that you may have a repeat of the year before. If you want, you can change either the percentage column or the dollars column, and it will actually reflect the difference between the two. So if I change this one from 6% to 7%, as I field exit, you'll notice it actually recalculated the revenue and actually recalculated the variance, because it recalculated all of the totals in the model. So the idea here is that we work through this model, gradually refining till we get a result that we like. When we click save, it will actually pass those totals down to the detailed model. You'll notice that there are question marks next to each field. We thought it would be handy to actually show some ideas. So if I click on revenue, how can I increase revenue? Very simplistic, but look for additional products, look for new markets for your existing products. As we develop this intellectual property or this intelligence, we'll add to this library. If I click on cost of goods, how can we reduce cost of goods? Look for alternative suppliers to reduce the purchasing expense, reduce the freight or the packaging costs, and if we're purchasing overseas, maybe buy locally to reduce the freight and the packaging, and so on. More ideas on each of these question marks. Assuming we've saved, we now go to the detailed budget builder, and on this case it actually is in the format of a profit and loss. So we have revenue, cost of goods, gross profit, fixed overheads, and so on. Now the idea here is that the values from the high level or the top down budget are brought forward into the blue area, and the sum of the accounts of the roll-ups are actually represented in the grey area. Now to show you how this works, if I change the budget here from 4895 to $5,000 and I field exit, it recalculates the roll-up value, detects that it no longer agrees with the value passed from the top-down budget, and it also recalculates gross profit and as a result the gross margin. And if I roll down, you'll see that it always also recalculated the EBIT, the net profit roll-up, and the net profit after tax, and finally the current earnings calculation. The idea here is that we make the changes at the detailed level until we actually get a value once again that we like. As we click on the save button, it will pass those values back to the top-down budget, and we do that as a seesaw until we get the answers and the details that we like. At that stage we save the budget, and now we have created a budget for the year. In the budget worksheets there are a number of tools available. I'll click to the total view. The toolbox gives me access to a number of tools. If I go to the detailed level and I select an individual account, the toolbox comes up, and this time I've got a larger range of tools. It tells me the account number and the account name. I can actually increase the existing value by a percentage. I can actually set all values of all fields or to a certain amount. I can actually add a total value and then it will divide by 12. I can actually enter a value here, and it will phase it according to the phasing percentages that I enter into this table. I'll leave these two for when we get to the balance sheet, but we can actually base it on last year's growth. If it's a cost of goods item, we can actually set it as a percentage of the revenue of a revenue item. So for ladders, we may actually enter 40% as the cost of goods. We can delete a count, obviously, and then we can enter numbers of units that we expect to sell, the unit price, and then it will actually calculate the revenue value for each of those. Now, as we're going through this toolbox, we will be making assumptions, and quite often it's difficult to remember those assumptions. So we've included a text box where you would enter in your assumptions. This is based on growth of 5%, etc. And then you would, once you save that line item, it would actually save the assumption with that line item. Even if there was a budget in the accounting system, we can add new accounts. We may now be thinking of adding new products, new services, and we can change the mapping of various accounts if we can see that the budget doesn't balance or isn't in the correct format. We can export to Excel spreadsheets, and then we can just save the budget under a name that we'll remember. My Business Manager provides for multiple budgets.